I think it's totally a different story. We've gone through 6-7 years of very hard recession in that sense, and with the recapitalization of the financial institutions, creation of the bad bank, we've restored a lot of that credibility on the fundamentals of the economy to obviously get out of this problem, that mess in that sense. And you look at the situation of the financial institutions, and most of the toxic assets are out of the balance sheet. So the engine of the economy looks like it's going again in that sense. I think having restored that, and particularly seeing how unit labor costs have come down, and seeing all the unpopular reforms, labor and fiscal, has made the economy really look a lot more buoyant in that sense, and the perspectives of the outlook are obviously being revised every 6 months, and it looks like our GDP growth is going to be much higher than expected. So a lot of the growth is or the interest of focus in Spain has been driven by a change of our situation in that sense. And I think you're seeing capital flows around the globe in that sense, and particularly in EMEA, we're seeing there's a lot of international money, and a lot of that has been finding investments, mainly the UK or Germany and whatnot, and suddenly focusing as well in Spain, and they see that can get the kind of returns that they're expecting, and they see that in terms of capital values and a lot of the fundamentals behind are really at historic lows. So it does seem like it's a good opportunity in that sense to obviously position yourself now in that market, in terms of having a strategy of regional diversification in that sense, or finding yourself positioning early in the market. So we're seeing a lot of the investors 2014 were really international, US mainly in that sense, and we're seeing the residential particularly gaining more and more interest. I think initially the strategy has been from investors to obviously acquire these platforms from where they can manage these assets. You have to bear in mind that in Spain as well, it's historically has been owner-occupying market in that sense, in the sense that it's got 85% ownership in that sense. So there isn't, as you would find in the Germany or the UK in that sense, such a large market institutional stock in that sense, of residential stock. So acquiring that stock has been mainly quite complicated. A lot of activity it's taking place from the Sareb, which is the bad bank, obviously being active and putting a lot of this stock out in the market. The other sellers have been, regional governments selling a lot of this portfolios of social housing, and others, the traditional real estate funds like, Santander or Bankia, for example, that we traded last year and sold to Goldman Sachs, have been, really the most active players in that sense. But we see basically the residential prices in Spain bottoming out. We're seeing that, you're looking at the historic levels, they're right at the bottom in that sense. So the great potential, and you're seeing that homeowners, international homeowners, UK, German, Netherlands, returning and buying really good opportunities in Spain, and the institutional investors seeing that the fundamentals behind the sector are fairly strong in that sense and provide a good outlook, being more and more active. And I think example of that is both my colleagues here in the panel, Patricia and Cor and whatnot, obviously looking at the markets in Spain, whilst years back they didn't. So it's a good sign.
Corestate is a pure opportunistic investors. We try to gain IRR returns for our investors north of 15, 18%. And saying so, it's getting really hard to do this job in buying into German residential, as the focus of international investors, institutional investors for the German residential market is quite strong at the moment. Why is this so? I think this is not so much driven by debt as it was in 2007 or 2008. It's more driven by enormous amount of equity and no idea where to invest otherwise. Yeah. If you go to bonds, no, that's not a real good idea. You go to the equity markets, that's quite unstable. So German residential with returns, cash-on-cash returns of 3.5% or 4% now seems to be a real alternative for institutional investors. So that's the reason why an investor like Corestate, as an opportunist, steps out of the German residential market at the moment, because prices are high. And that's why we step into the Spanish market, because we do see the Spanish market bottoming up at the moment. Fundamental data showing that things are getting tremendously better in Spain. And as we did always, if we enter a new market, crucial for the success is to find a real professional and partner that is into details in these markets. And with the Grupo Wilhelm in Spain, I think we found one of these partners. and we now start to make mostly developments in the residential sector, in the high-end residential sector within Spain, and in the touristic sector on Marbella, Mallorca, etc., and trying to arrive at returns that we had in the past with dealing with German residential.